Well, from my experience, I tried to do it myself and it didn't work. So I was literally at the foreclosure courthouse, like the courthouse steps trying to buy foreclosures when I was 21, 22. I didn't actually close on any transaction till I partnered up with somebody. So I think partnering up with somebody that has experience, has already, drugged themselves through the mud, you could be maybe a smaller part of a transaction that actually happens or that is successful instead of doing it yourself.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara and this is the Know Your Why podcast. Today I'm here with Dr. Amir Baluch. Dr. Amir Baluch is a wealth strategist, private fund manager, and international best-selling author dedicated to helping professionals achieve financial independence. He's a founder of Baluch Capital Partners and Financial Wellness MD. So I want to stop there, Amir. I want to let you kind of tell your story, like I mentioned. But first off, I want to say thank you for coming on the show. Thank you for being here today. I'm very excited to talk and kind of learn more about you.
Yeah, thanks for having me.
Absolutely. Why don't we just start with your background? Tell us a little bit about yourself. We'll kind of hear your story, and then we'll just have a conversation from there.
Well, right now I'm a semi-retired anesthesiologist and somewhat of an investment banker of sorts, mainly dealing in private securities, but it wasn't always this way. And it's not something that actually when I was a kid, I planned on doing. So, when I was a kid, my dad, who's an internal medicine doctor, I saw him with the stethoscope. That's what I always wanted to do. But when I was 21, I actually didn't get into medical school. I got my fat rejection letter and I was like, okay, what am I going to do with my life? So I had my life savings, which wasn't that much. And I went into starting my first business where I lost all of it in a year. And then I went to live with my parents while I reapplied to medical school. And while I was reapplying, my dad, who's a successful internal medicine doctor, actually went bankrupt. And so we had to move to a one-bedroom apartment. Actually, there's only $250 a month. So you can imagine what that's like. But then I was thinking to myself, I really don't want this to happen to me again or anybody else, which is why I actually got into this financial track back at the age of 21. But obviously, I did get into medical school, finished doing anesthesia in Miami, moved to Dallas in 2010. So now I can start paying off all this debt, right? So
Yeah.
as I was paying off debt, I didn't forget my financial goals. So I got my securities license, real estate license, and I joined a boutique investment bank here in Dallas, actually in Plano. And I worked with them for about half a decade. We did maybe about 600-700 million in multifamily hard money lending, fix and flip funds, a lot of real estate private securities, and a couple one-offs, other private businesses, private equity deals. As I was doing this, people were interested in what I was doing. So they wanted to partner with me. And so they were investing through the broker dealer side of where I was at into multifamily and real estate deals. And then in 2016, I went off on my own. I brought my brother with me, took him out of his MBA courses and said, hey, I need somebody to be the legs of this thing. I was still doing anesthesia at the time. So then we formed Baluch Brothers Development, Baluch Capital, and we started putting together private securities ourselves backed by real estate. And that's kind of where we've gone to where now it's a full-time job for me and my brother. And we've got a lot of hiring to do the next few years too.
Yeah, that's super fascinating. I've immediately have tons of questions. So this is very, very interesting background. I think so. I find that a lot of people that, especially that that I've met, but especially through the podcast, that have had some like negative event that came up in their sort of early years has often turned them in this direction, right? Like turned them towards wanting to have a better understanding of finances. I mean, honestly, like a lot of times it just comes down to like understanding stuff, right? It's not even you took it, I think, to an extreme in I want to talk about that too, but like just understanding how to uh, think more in a more educated way about your own financial stability and long-term investing goals. A lot of people talk about rich dad poor dad as like a jumping off point, but I think what's interesting, and I don't want to kind of hit you with a painful point, but I'm sure a lot of people are going to hear that story and be like, how does a doctor go bankrupt, right? Like
Right.
that doesn't, and I you don't need to share that whole story of how, but I think that the thing to think about is like having money, having a high paying job does not equate to financial literacy, financial understanding, and therefore
Right.
financial freedom. And sometimes it's the opposite. Like I think that the SEC rules about accredited investors, it doesn't make any sense to me, because just because you make X dollars doesn't mean you know anything about money. It just means you have more money to lose, I guess. But it's a lot
Exactly.
of you can be. We hear stories about it. Athletes all the time, things like that. You can be wealthy, you can have a lot of money and still lose it all. So it's kind of like an interesting, I guess, start for you early on. I don't make you relive all that,
Well, I can
spill the
share some
details on your
insight
dad.
because some it's not. It's actually when it's applicable for a lot of people. So what happens when you're making six figures or seven figures? You become very lendable, and you also can become an attractive target for people that need money, right?
Yep.
So, and maybe some of those partnership things, you got to sign on the note to be a partner. You're investing lots of money. You're buying into this and that, but not really knowing what's going on. So in my dad's case, he was over leveraged. Some partners maybe didn't come through on things that they were supposed to do, and one thing led to the next. Also, a kind of a weird issue, but let's say if you're trading options or stocks, if you don't report your cost basis, there are some brokerages that only report the gains uh, on your forms. And so if your accountant doesn't even know to ask you for your cost basis, or you're not communicating openly with your
Yeah.
CPA, you're going to miss a lot of things. And it's not really, believe it or not, your CPA's job is not to help you with your taxes. It's mainly about being compliant. It's mainly tax strategists and wealth strategists that are actually out there talking to you about tax planning, things like that. So all these things uh, affected my dad negatively to where he's over leveraged, and then at some
Mm.
point you just can't pay the bills and things have to shut down. And I've seen in other situations too, because now that I've helped uh, advise other physicians and doctors and a bunch of different people, business people too, on this. My dad wasn't the only one. Some other people got out and they're just paying off debt for years, and they keep it on the down low. They don't want to talk about it openly, right? But
Yeah, I
it
believe that.
happens more than you think, actually, because when I ask if somebody's accredited by net worth or not, and they're in their 60s and they don't have $1 million net worth, then the stories start coming out. Then you say, oh, this is happening to more than just one person. And usually it's a lack of education or guidance, or people making a lot of decisions on their own, thinking that because they were successful in whatever their profession is, and they're used to calling the shots all the time because they're the man in whatever industry they're in. Now
Yeah.
let me call the shots of my own personal finance. But in this example, physician expertise doesn't translate to making good
Right.
financial decisions or
Right.
business decisions or choosing your business partners,
Yeah.
right? And that's, I would say, it's almost like an epidemic, but kept on the down low and on the hush hush because it's pretty embarrassing, right? But that's actually why I do talk about it in my book, to let people know, hey, I'm going to be open with you. These things happen. I openly talk about deals that didn't go that well because those are learning points.
Hmm.
You either learn or you earn. Those only two things happen when you invest, right? So if I don't share all these painful points, they're missing some really good learning points,
Yeah.
right? So
Yeah.
that's
Yeah.
kind of how I think about it.
Yeah. No, and that's why I brought it up. I think because a lot of people will think like, oh, that could never happen to a doctor, right? Like it never happen to a lawyer. It could never happen to someone, who's got a job that is associated with a good salary. And it's like, it doesn't matter. I mean, that stuff. And as you said, like you become very lendable. Anyone's going to give a doctor a loan. Like I was literally,
Right.
I was talking to someone early this morning, like laughing because I'm a veterinarian and they will give a veterinarian a loan like basically in any situation because they're like veterinarians pay off their bills. Like that is historically very true. And it's like, that's great. That's a great quality to have, but that doesn't necessarily mean that you should, be leveraging to the hilt and all of that. And so it's just kind of your point too about, doctors, especially we think we went to school a long time. We know a lot of things, but we know a lot of things about something specific. We know a lot of things about medicine, and it's a mistake to think that you just automatically then know everything about everything. Like, and it's, you did something. This is what I kind of wanted to get into next. Is like you did something. You became a doctor, but you also sounds like in parallel got your securities license, really went into the financial advisor role at the same time. And I didn't do them at the same time originally, but like I have spent the last 5 years in what feels like a second residency, spending my time on learning this stuff. Certainly still don't know everything, but people think i'm just going to I'm just going to go buy a house, or I'm just going to go buy, I'll figure it out on my own. And it's like, it's not actually, there is a lot to know there. And I think it's very intriguing to me that you went, tell me, I mean, a little bit about that. Like you did that in parallel, like, or maybe you went to med school and then how did that all tie in together in terms of timing?
Well, so good thing about anesthesia is if you're not on call, you're usually done around 1, 2, or 3 p.m. So, so after 3 p.m., I was pretty open and single, not married. So I had this time where I could really do it, especially coming right out of residency. So I was going to a bunch of multifamily events and just real estate events in general, just seeing where I'm going to buy my next duplex or fourplex. That was kind of my mindset at the time. And went to this one meeting where they had one of the top multifamily flippers, I guess you could say, uh, there speaking, and he explained things really well. And I'm like, you know what? Let me talk to who actually put on this whole event. And they were starting the broker dealer side of this boutique investment bank. And I'm like, hey, how do I learn this stuff? I kind of want to do what you do and do this at a high level. So I know I'm not going to, they were talking about taking down this $40 million apartment. I know I couldn't do that on my own. So I was asking him a lot of questions about how I did it. And actually, that same day, we just went across the street when the event was done, and he explained a lot of things that really opened my eyes. And I said, "Hey, I just want to follow you around." And even when he was flying out to other conferences and doing deals in other states, I just flew out with him just to be around him, non-compensated stuff, right? Just seeing where I could help out. And then eventually, they were putting together the reps for the broker dealer side. I got my securities license because then you can actually really learn and get into it. And if I wasn't doing anesthesia, I was working with them, looking at the next deal or doing property tours and learning at the ground level, which is very cool. All about structuring deals, understanding comps, understanding the management side, without me having to, really pay for this education. But I was, a little bit getting paid while I was working there, not a lot. So it was kind of like a second residency, like you were
Yeah.
mentioning before.
Yeah. So your did you take the Series 65? Is that what you to become a broker dealer? What did you do to
Those
leverage?
I did a 63 and a 22, but you could also do a 65 and a 22.
Gotcha, gotcha. And just for maybe explain why you would do that to people listening. I think a lot of people maybe not familiar with the differences there, but
Oh,
might be good to talk about what a broker dealer is and kind of
oh,
uh,
right, right.
what goes into
So
that.
the way this is a good way to look at it. So if you're going to be managing wealth to a certain extent, you could be on the investment advisor side, which is a RIA, registered investment advisory,
Mhm.
where you can get AUM fees. You get like it's just like a financial advisor, pretty much. You get a certain percentage of the money that you're managing. On the broker dealer sides, you actually get commissions for raising capital for the acquisition of certain deals, and they both kind of have some fiduciary responsibilities. Just the structure is different. The compensation over time pretty much ends up being the same. The cool thing about the broker dealer side is they deal with private securities, whereas on the RIA side, they're still 95% traditional stocks and bonds.
Okay.
So if you want to get into the securities world and deal with real estate, pretty much broker dealer route is the way to go, especially if you want to be on the deal side. So that was a decision. That's how basically they had made the decision. I was just kind of along for the ride, right? So that's kind of how that works. And also, you do have traditional financial advisors, but because of where they have their licenses held, let's say it's Morgan Stanley or something like that, uh, they are only allowed to promote products that their supervising group offers. So they can only get commission off of that or get paid off of that. They're restricted. Whereas on the BD side, you could pretty much do everything. You could technically even do public securities, but you have to get a Series 7 for that. So there are a
Mhm.
bunch of different things you could do if you're not a financial advisor, especially if your goal is to get into private securities. That's probably the deciding thing
Yeah.
right there. So if you want to do private securities, you want to do traditional stocks and bonds.
Yeah. And that to me that's a huge point because a lot of people don't know the differences here, right? And a lot of people go out and get a financial advisor and don't know that that person can only offer to you what the company that they work for tells them they can offer to you. And in most cases, that's just stocks and bonds. And so if you wanted access to any sort of alternative investments, in this case we're talking mostly real estate, but if you want access to any of that, you do need to connect with a broker dealer, or you have to go straight to the specific deal sponsors. And so it's kind of
Right.
I think a nuance that a lot of people don't necessarily know about. And it's, you may run across this too, but I talk to potential investors, and sort of go through the whole thing, talk about the deal or whatever, the fund, whatever real estate you know offering we might have, and then they say, okay, I'm going to go run it by my financial advisor. I already know their financial advisor doesn't know anything about it, because they're going to be, if all they've ever done before is invested in stocks, then that's what their financial advisor is allowed to tell them. And so it's kind of like people don't know that that's the reality. And it's like, if that's all you want to invest in, fine. I don't, this isn't like to disparage them. This is just, as the person whose capital it is, you do need to know what that person you're trusting to advise you, what their motivations are. And so I'm glad that
Exactly.
you kind of brought that up and talked through it. I think it's some really important pieces to that kind of
And
whole story.
even to go further on that. So if you are a financial advisor, if you even say you could get in trouble for saying, yeah, I think you should go buy a rental because you need something for some depreciation. That's what we call selling away. That's actually a term that they use. And you can get in trouble with whoever's holding your license if you're quote unquote selling away. Or let's say if you also have your real estate brokers, I had my real estate brokerage, if I said, hey, why don't you buy a turnkey rental here or there, or why don't you do this or that,
Yep.
that's an outside business activity, and those have to be cleared by whoever's holding your license. Luckily, in my situation, I was cleared for everything ahead of time before I got my license, so I could, you know, give whatever suggestions I want. And then the other thing is when the financial advisors come into it, they really are not qualified to give any advice when it comes to real estate because that's not their expertise. So, first they can't give the advice. And if they did give some advice, they're going to more likely say, "Hey, that's risky" or something like that. Because if you do invest there, they have less AUM and basically they're losing money. So
Right.
there's a negative financial incentive for them giving you the green light on going, going for something like an asset-backed promissory note or something like that to diversify. They're
Yeah.
financially driven to say no. Now,
Yeah.
not everybody is going to be like, hey, be so negative on the real estate side, but you just have to kind of keep that in mind, when you're asking people for advice.
Yeah. Yeah. Like I said, it's just what's their motivation, and they don't. The likelihood of someone, being your sort of traditional financial advisor, but they believe strongly in real estate as a good investment vehicle, those two things just don't mesh. And so, like you said, they'd either be uh, essentially sending people away from themselves and the company they work for, and therefore losing money themselves, uh, or they're just not going to tell you about that stuff. So it's kind of
Right.
there's just no incentive alignment in those scenarios to look outside of what products they have to offer, and it becomes very much in my mind very much sales based rather than like true financial advising in the sense that
Right.
it's what products they can offer you. So um, a little bit off topic, but I thought that was important piece of information that kind of goes along with your story. So let's talk a little bit about kind of your perspective on real estate and kind of asset classes of choice. What are you interested in? Have you been interested in on the real estate side, and what are you sort of currently looking at the market now?
Well, I like a little bit of everything. There's a place for everything in somebody's portfolio. It just comes down to where you want to allocate more or less. So, my background's been multifamily. Even in medical school, when I was 25, I bought into my first multifamily. So that's almost 20 years in multifamily experience and a pretty good track record there. But as I look at the trends, around COVID, I actually sold all my commercial real estate around 2020, and I just kind of waited. And we transitioned, my brother and I transitioned our development company into doing build to rent communities,
Okay.
which right now, just as of like the last year or two, seems to be by some people, this is the best performing asset class out there right now. Because it's a little bit like multifamily, but you don't have as much turnover. If you're doing it brand new, there's not much maintenance either. And it looks like there's not as much of a ceiling on how much you could charge for rent because you're offering a different product compared to some other rentals things. And it just happens that it's a blue ocean. Only 5% of what can be rented right now are single family homes. And the demand, even with the top 3 or 4 developers getting into build to rent also, the demand's probably not going to be met for like 10, 15 years. So we kind of transitioned there. We already had some tailwind behind us because we've been developers before everything kind of changed with some unaffordable rents. But we like that a lot too. Now, I'm going to be a little bit biased toward that because that's what we do, right? We build houses. So, of course, I'm going to say it's awesome. But I just talked to a hospitality guy the other day and he showed me the game. I was like, wow, that's really good. They build also. I was like, okay, that's pretty interesting. I try to talk to some of my office people. I think the trend is against them with people working from home, although
Yeah.
I've seen some exceptional medical office buildings. So every asset
Right.
class, depending on if you go into any asset class and buy it 50 cents on the dollar, and it's a good deal, right? So you
Right.
go into any asset class, just how are you going to get into it? How competitive is the market? Are you doing the due diligence? Who's doing the underwriting? Because for the most part, anything can actually make sense just depending on how you buy it. And then the tailwinds are the tailwinds, and those change all the time. So we could have a second round of COVID. Who knows what might come in? Whoever the president is, that affects things too. That's why a lot of people sitting on dry powder until just these
Yeah.
elections
Wait and
were
see.
over, right? So
Yeah.
all these different things influence industries too. But that's why I kind of look at. I always am looking at everything. And Baluch Capital is a multi-asset platform. We do, more than just real estate. We always want to have different. It's almost like when you're going fishing, you want to have instead of just having one line out there, might want to have 4 or 5. And when something's really hot, you're going to put more effort in that one and reel something in.
Yeah. Yeah, certainly a strong case for diversification. And I think, you mentioned that people will say, "Oh, this asset class is good or bad. This market is good or bad." And it's like really very much comes down to sub-market, maybe even sub-asset class, right? Like if you say
Right.
office is bad, but medical offices are not bad. Like there's kind of that thing that
Yeah.
really having a good knowledge of what your goals are, and then being able to underwrite well. And so you may there's nuances to underwriting each type of asset, and so you may have certain areas where you're feel very confident in your underwriting, and maybe others that you don't. But it's sticking with what you know, digging in on the data, and just making informed decisions. And like I think at the end of the day, as investors, what we're looking for is to make a risk adjusted return, like ultimately
Right.
something that's not crazy risky, that will get us some return on our investment. Or again, that can go in a number of spectrums, right? Because you can have someone who's like very willing to risk a lot for high returns, or vice versa. I mean, it's just there's so many different approaches to it, investing, real estate, all of that. And that it's, I think people get a little bit pigeonholed in one spot, and they're like, well, that doesn't work, or this asset class is the best asset class. And it's kind of like, well, maybe that's a hot asset class right now, but what's going to happen in the future? I think it's an ever shifting landscape. When you talk about build to rent, um, what maybe give us some of the pros and cons there. Sounds like something that you're sort of high on, but for what reasons, and what, because I think like I said, you'll hear people argue different asset classes, and it's like some people will argue multifamily because, well, then you only have one roof all over these units. But if you've built to
Right.
rent, now you have multiple roofs, and it's like, well, it's not just roofs that we care about and all. So what is your angle on both the good and the bad around built to rent?
Well, I say on the good side, it's a blue ocean. Institutions are buying this up as much as possible, so there's no issues selling it. You have the option to sell or refi. Let's say if I build 40 unit community, I could keep half and sell half. So you have a lot of options as the markets change as you're building. You could decide to keep some, sell some. You could slow down. You could speed up because we're on the development side. So we can kind of adjust with the market on a month by month basis. Whereas compared to multifamily, maybe you're going all in on one thing. Now, other things with built to rent, I'll talk about maybe one or two positives and then maybe some negatives too to keep it balanced. The positives that are in built to rent are that when somebody stays there, a lot of times these people stay for 2 to 5 years, and the biggest expense a lot of times in multifamily is the turnover. A lot of people said that's the largest expense, so you don't have that large
Yeah,
expense, and people really
yeah,
feel this is their home, so they really do take good care of it. And you just have to offer some amenities nearby, like pickleball court or a dog park, or at least be close to something like that. Or those people might want to have an office. Maybe they're not in an apartment because they want to have an office because they work from home and they've
mhm,
got 3 kids, so they want a 3 bedroom house with an office. And if you get them what they want, they're going to be a tenant there for 10 years, right, until their
right.
kids are
That makes
18 and
sense.
go to college. So now on the cons, when you're this is on the building side, and then I'll talk about the buying side. So on the building side, you really have to know what you're doing, because you can easily get over leveraged, and if there's too many days on market, if you're selling, you better be buffered on that on your underwriting, and get ready if something takes longer to sell on the market. So you have some of those things you have to think about, and then also the will you be able to get the rent in that area or not? Like you have a pro forma rent, but there are other people developing too. So you have to look at how supply and demand is in your favor, going against you. To mitigate that on our side, we go to places where people can't just build whole communities. Like we find little pockets of infield where there's already houses all around. We'll do a ground up development where nobody else is renting or it's very few rentals. So, so there's some ways to mitigate all those risks too. Now on the buying side, even though the valuation for single family homes are on comps versus cap rate, and if somebody doesn't understand cap rate, we can explain that in a second too. But the values are off of comps. But when people buy it, if for the cash flow, they do put a cap rate on it. So if people don't know what cap rate is, if you buy something all cash, what is your ROI for the year? So usually in real estate, it could be anywhere from 4 to 7% plus or minus is what it is. And then if you have some good leverage, you can get a little bit more, or some value add, you get a little bit more. That's pretty much the real estate game in a nutshell if you're buying.
Yeah.
So, we like it because we're building based off of comps to sell, and then people can come in, and if they put in offers based off of cap rate, if we want to accept it, we can. If not, we already know we'll sell it to either an individual person or just sell it to an end user that wants to buy it and own it for themselves and not rent. So
Right.
that's the cool thing on the development side. But on the buying side, you're going to be getting returns similar to other commercial real estate assets because it's a rental based type structure. So if your buyer is going to be like that, you might not get the price you want compared to somebody, who's compared to a developer that's going to be selling it just to individual people. So you have to pro forma it based off of a cap rate thing too, and know what people want on that side.
Yeah. Well, yeah, the ability to have multiple exit strategies is I think, in at least as a outsider looking in, seems like maybe one of the most appealing pieces of build to rent, because it's, if you have bought or developed whatever it is, you own a 200 unit apartment building, you're not going to sell those units off individually. You're going to have to sell them to someone who wants to buy the whole apartment complex. So it's definitely, I mean, it's, again, nothing's 100% true all the time. People will do condo conversions and things like that of some apartment complexes, but most of the time you're really looking at almost an all or nothing transaction. But with that build to rent, if you build however many, you build 4, 10, 40 units, you can sell some, rent some. I mean, you have definitely some ability to be flexible there. Is there, and I'm sure this varies in market. Is there rent control associated with build to rent? Do you know if that's something that comes into play? And maybe you don't have rent control at all where you're located, but I don't know how that would be if it was newly built. I know in LA it wouldn't be subject to rent control, but I don't know how that would work in
I
relation
don't think we
to.
have that. Yeah, in Dallas, I don't think we have that, but there are certain areas where the government may give you some financial incentives, like maybe some tax abatements in exchange for having the rent be more affordable.
Mhm.
So they do have that.
Okay.
But in our areas that we're developing, we actually happen to be developing an opportunity zone, and they just gave a bunch of tax abatements and no restrictions on how much we could rent for it. So we kind of get the best of both worlds there.
Yeah, no, that's nice. Opportunity zones, I think, are um, really tremendous for development. And the ability to go in there and make a great return because of those tax advantages of that location. So and it also, you're developing
Yeah.
space that isn't used or is used for more dangerous activities, I guess, if you will. But it's a good incentivization program. So
Right.
Amir, let me switch gears. I want to get to ask you the questions I ask every guest, and the first one is always related to the name of the show, being Know Your Why. So, what is your why? You're a doctor, a successful real estate investor. I mean, you've done a lot. You've had a tremendous amount of success. What kind of keeps you going? What keeps you motivated?
Well, it's kind of changed over the years. Initially, it was about just trying to survive and not have something bad happen to me or my family financially. And then when other people wanted to partner with me, it's like, wait, this is actually really cool. Now I can help people by teaching them what I learned for myself. I didn't know people were going to be that interested in it. So I thought most people would just do, put the money in S&P index and max out
Yeah.
their retirement account, right?
Yeah.
So then, so that was kind of cool to partner up with some of my buddies and now just other people in general. So that, and being able to educate people and prevent them from making the mistakes that I had made and my family has made in the past, that's pretty satisfying to see that. Some other things we're doing along the education lines is I just actually last week I bought a college in Pakistan and we're expanding our education over there. And so another goal I have is to help out those people get skill sets that could help them be freelancers or earn money in US dollars because their inflation is kind of through the roof. It's like 30% inflation over there. And we're,
Oh, wow.
we're worried about like 8% over here, right?
Yeah.
So so to be paid in US dollars and have skill sets that could bring in a different type of economy over there. So we just started that. We just kept on talking about it for 4 years, and then it was literally just last week went ahead and sent them a wire transfer, and 3,000 students. We're going to teach them everything. In fact, uh, we can teach them how to do real estate transactional coordination, right? So you have transaction managers for that. They can look up comps. They can do a lot of real estate virtual assistant type tasks, right? And as well as like graphic design or even just a general virtual assistant helping with emails and, booking your favorite restaurant on a Saturday or something
Yeah.
like that. So, but I think that's going to be really cool to teach those people some of those skill sets that people are looking for in the U.S. So that's another reason for what we do. What we do.
Yeah, that's fascinating. Congratulations on that. Seem it's I would imagine, great opportunity for you, but also for them and to help them, combat some of those inflationary measures, teach them new skills. I mean, I think there's a lot to it there. So that's pretty amazing. I'm
And they
excited.
love America, by the way.
What's that?
They all love America, by the way. If
Oh,
they're
yeah.
working for somebody in America, like this is like their dream come true, really.
Yeah.
So they
Yeah.
love it.
It's oh, that's great. I just I love the idea of just being able to give back in some way so I think that's fantastic. When people hear this and they want to reach out to you, what's the best way for them to get a hold of you?
Well, if you want, you go to baluchcapital.com/, what's your why. And so we're going to have a contact form there as well. If you want to learn more about me from my book, you'll have a link to get my book for free. Just pay the shipping. We have a 12-week boot camp if you want to see some of my educational material. Or if you got a question about something I said, or maybe you thought maybe I said something that's not right or need some clarification, you can book a quick one-on-one call with me there. There'll be a hyperlink on that website as well.
Okay, fantastic. We'll make sure we get that in the show notes. My last question for you: what what piece of advice would you give to someone who wants to get started in real estate? They hear this, they're kind of inspired by your story. Definitely kind of a unique parallel track, I would say, and very interesting. But someone hearing that, what would you tell them would be a good starting point?
Well, from my experience, I tried to do it myself and it didn't work. So I was literally at the foreclosure courthouse, like the courthouse steps trying to buy foreclosures when I was 21, 22. I didn't actually close on any transaction till I partnered up with somebody. So I think partnering up with somebody that has experience has already drugged themselves through the mud. You could be maybe a smaller part of a transaction that actually happens or that is successful
Yeah.
instead of doing it yourself. It just doesn't make a lot of sense anymore. So I never really got anything done in real estate till I partnered up with people, and you end up growing faster that way, and it's a safer way to grow. Because the worst thing that could happen is you have a bad experience trying to do it on your own, and then you're like, oh man, screw that asset class. Yeah, it'll never work, right?
Yeah.
Maybe you just didn't partner with the right person or anybody at all. And so that's why I think podcasts like this are really good. People are getting education, even if they're not partnered with you, Jason, they kind of are a little bit, because they're getting education from you instead of trying to go buy their first property on their own. They're learning some life lessons and from the school of hard knocks from people that are on your show.
Yeah. No, I think that's a great point. I think the that feeling of, I tried to do this, it didn't work out. The first one didn't go well. That's going to be a very tough, sort of mental hurdle for anyone to get over, really.
Right.
But especially if you're not surrounded by kind of the right partners, teams, mentors, that sort of thing allows you to get through those storms and kind of realize, yes, sometimes it doesn't go perfect, and that's okay. You can keep on and build from there. I think one of my biggest fears about, when we go through a time like we had recently with the interest rates going up, distressed deals and things like that. Like, I feel like a lot of people, both on the active and passive side of investing, are going to have, sort of that one bad experience, and then just say, you know what, this isn't a good idea, and that's far more detrimental to like your long-term financial health than just continuing forward, right? It's like, you don't, if you stop after the one bad experience, then that's all you've had is one bad experience, and so you have to kind of get back up on that horse and keep going. And I think you're spot on to say that, that is, by partnering with others, that's a really great way to do that and learn from them, and shorten your learning curve. You won't avoid all mistakes. You won't be able to have nothing go wrong ever, but at least you have that support system built around you to manage it if it does.
Got it. Makes sense to me. Investing can be a team sport.
Yeah, absolutely. Well, Amir, this was great. Thank you for coming on the show and sharing everything that you did. I think a lot of really important stuff for people listening. So thank you, and thank you for taking the time out today.
No problem. Thanks for having me. Great talk.
Absolutely. Folks listening, make sure you connect with Amir. We'll have all of that information in the show notes, like I mentioned. And please like, rate, and review the show so we can continue to get more great guests. Thank you all for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?